we generally become outliers fund 1, fund 2, and fund 3. And starting this year, outliers became outliers VC DAO that we officially deploy on Ethereum through Syndicate.
Thank you, Poseidon. Last but not least, David, would you take the chance as well and quickly introduce yourself and your way in your professional career?
Of course, that would be a pleasure. So hello, everyone. First of all, thank you for having me here. So my name is David. I am the founder of Incentive.io protocol. I am a PhD graduate from the University of Gdańsk in Poland with over 10 years of professional experience in the blockchain industry since its early days, basically as early as 2013. And I've been involved in AI and IoT sector since 2014 as well. I am the former CTO of Fragma Metaverse, as well as a senior investment manager at Terminus Technologies and a senior business consultant and co-founder of various listed blockchain projects. I am also a senior full stack software architect and Solidity programmer by profession. And I am currently focused on the development of leading DeFi and lending protocols, which I hope we'll have a chance to talk more about within today's session. Thank you.
All right, thank you, David. Just my professional career, very brief. I'm actually an urban planner by profession. Never really worked in that space, but I love the idea of creating experiences. And I kind of became involved in tourism and travel as well, and like creating experiences there. So I brought this background into the blockchain and crypto space in 2015, started digging a bit deeper and understanding the whole thing, also invested a little, and now I'm on board of the Bitstore project and as a marketing director. So what's the Bitstore project? I will just be very brief here as well. Bitstore is the world's first Web3 investment platform that integrates fiat crypto exchange channel, social fi features, and expert investment strategies. It can be simply understood as a platform integrating Web3 technology with on-ramp and off-ramp options, as well as digital asset investments, social fi, community learning, plus support from experts. Yeah, this introduction of the project is already like mentioning Web3. What is that actually? There is definitely a lot happening. Web3 means like there was a Web 1 and there was a Web 2. So what is the Web 3 or third generation internet actually about? Let me give a bit of an introduction and setting the scene here. So Web 3 is like the evolutionary step of the internet. First generation was basically simply web pages. The second generation was evolution in terms of apps and social media and more mass adoption. And since we are now in the blockchain space and in working in this business, well, I guess I'm not sharing big news when saying that blockchain-based web would be the internet third generation. So what is the most significant characteristics? Well, there's a few. First of all, it's user-friendly. It is more secure. It has more private and better connected setting. The blockchain technology creates decentralization and is also in ensuring digital data ownership. And that is what also Bitstore actually is trying to achieve. We're trying to use this Web3 technology to challenge the old-fashioned way of Web 2 trading platforms, as well as certain established trading platforms in the cryptocurrency market. There is certain things happening also in the blockchain space, centralized exchanges that are already like acting like third parties, and they are collecting a lot of data. And we have seen that this is actually already kind of like the repeating the Web 2 finance and investment era. And yeah, it is from my point of view and from our point of view, very often to the disadvantage of the individual trader or retail investor. So how did it happen in the past? Web 2 or the old-fashioned way of investment was basically you have an investment fund or like an investment bank, and they were the intermediate, the middleman between a company that needed money and investors that had the money and wanted to gain some extra money with investing it. And yeah, those investment banks were kind of crucial in that system, and at the same time, they're yeah, also not 100% to trust, and they also took a part of the benefits that were generated. So the fund manager was the one that was deciding about which projects to investigate. He approached companies, he collected information, he made market research, and so on and so forth. So all this information was centralized in his hand and could be used in his powerful position. So that is something that has happened in the past and is definitely putting at risk that there is a logic and unbiased process of investment assessment. And that is, yeah, where we think, yeah, there is a conflict of interest very often. The fund manager would probably favor or have a different kind of communication to the big fishes, the big investors in such a space, and is like letting those small investors and the retail investors unattended. And we think like there is a asymmetry in terms of information, in terms of yeah, assessing the needs, and there is definitely an issue of trust. Yeah, we would like to change this whole idea, and the phenomenon of big players taking advantage of small players by manipulating or controlling third parties, or the third parties themselves being not independent or affected by conflicts of interest. So this construction is not making them act in the general user's benefit. So that needed to be changed, and this is where we as Bitstore started using social finance as the way to get things done. Social fi is yeah, having different layers. First of all, it's directly related to the old-fashioned institutionalized concept of Web2 platforms, but we believe that yeah, why would a user pay for services that are basically done by the fund when yeah, the product development or the things going on can also be done in a cheaper way. We have seen that they spend money, the funds and investment banks spend money on development and promotion, and with each step the investment goes through, they take a bit of the margin, and there is less left for the investor itself. So this is basically negatively affecting the investor's return on investment. Yeah, so there is a disadvantage for the retail investor. This is source of information, and secondly, yeah, media exposure and promotion. Would not like to go into detail there, but we believe that giving back those advantages to the retail investors is the goal for us at Bitstore, making sure that information is being provided equally, so that they also have yeah, free speech and talking about investment projects or ideas, or just about the space of blockchain. And yeah, that is empowering the independent retail investor. And that is where we think Bitstore is strong and solves those problems of information and promotion. Okay, so that's about Bitstore. Maybe now it's the time also for the others to like briefly introduce their projects. And would you like to start, Miguel? What is what you are dedicating your time for, and could you just briefly explain to the audience?
Yeah, Quantum is it's a blockchain project. We've been around since 2016. That's when the original idea was presented, and actually back then we won an amazing event back in September 2016 in Shanghai. We won the Best Innovation Award because what we did was we implemented the UTXO model on a Bitcoin fork, and we combined this with the EVM from Ethereum And we designed something called the account abstraction layer, the AAL. And with this, it was possible to have smart contracts running on a UTXO blockchain, which is also, by the way, proof of stake. Quantum has been running proof of stake since it launched in 2017. And you can consider Quantum as a green blockchain that supports smart contracts. It has all the capabilities and all the power that you can see on Ethereum, but it runs on anything that can run a basic node. For instance, Quantum can run on a Raspberry Pi, which is a 5-watt computer. And in that way, Quantum is, again, it's a green blockchain, saves a lot of power. You need to have extremely powerful resources to run it. And we've grown over the years. Initially, when we launched in 2017, we had a huge growth, especially in the Asian market, because that was our initial target. Back then, we did an ICO in March 2017. This ICO was quite large. It was extremely large by that time. 11,000 Bitcoins and 70,000 Ethereum were raised. And during the years, we stayed true to the promise of investing those funds in growing the Quantum ecosystem, growing the Quantum community. And of course, over time, we had the all of the market cycles from 2017 to 2018. So we had to deal with the China ban from late 2017, which did affect us greatly because most of our social activity was focused in the Asian markets and especially China. You can imagine having 30,000 WeChat channel having to shut down, stop all marketing, and basically we were asked to refund everyone. Of course, no one took us on that offer. So, we kept going, and the government then told us that we could keep developing, we could keep building, and that's what we did. So by that time, we had to reinvent ourselves. We had to focus on the other markets, such as Korea market, Japan market, and start opening towards the Western markets. So that's something that really defined us at the beginning, because we were just getting started, and then we had to shut down where we were getting really great momentum, and it also affected a lot of the apps that were built to Quantum back then. So currently, Quantum has changed its focus. We're a lot more Western oriented. We even have an office in Miami. We have developers all over the world, of course. And right now we're focusing a lot on metaverse, video games, and entertainment in general. Because the way we see it, this is a great use case forward. You won't have that many issues with stuff like regulation in the future when you focus on something like video games, metaverses. It's not as complicated as going towards finance. Once you go towards finance, there's a lot of chances of regulation. And of course, we always focus the platform on being decentralized. Like there's no central entity, every node is equal, no validator nodes. We can't stop the blockchain. We cannot reverse a transaction. So that has always been our focus, our goal, and our philosophy to stay true to Bitcoin's philosophy. We inherited our design from Bitcoin, and we stayed true to it, but we just add a little bit of extra power with smart contracts. So that's like a very broad overview of what we've been doing all this year.
Thanks, Miguel. Maybe next one, David, could you just introduce your project? What have you been doing, and what's the focus of your protocol? Could you use the microphone, please?
Yes, sure. Okay, that will be my pleasure. So, well, basically, our product, which is incentive.io protocol, can be understood as Web 3.0 operation system. So basically, incentive protocol includes a host network and application and business layers, which basically enable one-click deployment of Web3 applications, including DeFi, NFT, GameFi, and more. So Incentive also creates the world's first fiat to DeFi payment system, which is open to third parties, cross-chain integrations, derivatives, and more. So a few words about the mission. So basically, we are determined to provide all-in-one multi-chain experience for customers and reduce the entry barrier of the Web3 ecosystems for businesses. So our vision is to provide Web3 services to billions of Web3 users potentially through providing sort of, how do I put that, blockchain agnostic Web3 development tool, if you will. So Incentive's mission is to build a fully decentralized, permissionless and user-owned public protocol supporting the deployment of decentralized exchanges, single asset staking pools, airdrops, and lotteries. So basically the newest features that are being developed as we speak include development tools for decentralized NFT marketplaces and other user-friendly applications. So we are specifically aiming to change the low utility of the assets and their liquidity in the current era of Web3. So Incentive also provides retail users and third-party projects with additional incentives in the form of monetization of the user traffic on their own platforms. So that includes becoming owners of their own decentralized exchanges and NFT marketplaces, and making profits on top of the swaps and mints made by the users without unnecessary exposure to impermanent loss, which is inevitable in case of providing liquidity on protocols owned by the third parties, such as Uniswap, SushiSwap, and similar. So this is basically how I would introduce Incentive to the audience.
Thank you, David. That's a clear focus, not like Qtum that is looking into metaverse and other spaces in the blockchain. Yours is definitely focusing on DeFi. How about you, Poseidon? What is your project about, and what are you focusing on? DeFi or metaverse, or let us know. Can you use the microphone, please?
Oh yes, sorry, I forgot to open up my microphone. Yeah, so I hope that this screen sharing will be helpful to understand. We are a student-run special interest group turned venture capital, but that became a venture capital turned venture DAO starting this year. So by end of last year, there's Joe Ito, the former director of MIT Media Lab, joining in us, and he hinted me that how come 6 years ago we were most like a DAO before everyone was talking DAO as a buzzword. How come after 6 years we generally become an institutional VC firm? And I realized that yes, because by end of last year when we were raising a bigger fund street, we were asked by our limited partners to go through the exact same process that many VC fund manager will be asked to do, such as acquiring fund license, custodian, audit by the Big Four. And we realized that it is going a little bit on the opposite road to decentralization, to be a real decentralized VC or a decentralized autonomous organization. So we went on to spend the first quarter of this year implementing the top 3 objective, which is giving all the venture partner and limited partners radical transparency. We are currently using Syndicate as an investment DAO platform for everyone to be able to see all the native tokens, NFTs, and even off-chain equity investment almost in real time. And if some of the limited partners investor are sophisticated enough, they can actually check those, verify those transactions in real time on Etherscan as well. The second one is actually my biggest motivation of making such major decision. which is to leverage and engage around 100 to 200 contributors who have voluntarily contributed to our venture capital in the past 5 to 6 years. When we were a firm, I find it a hard time to really give back, to quantify and reward their contribution. But right now, we have about syndicate, like this is the syndicate that we are using. For the second one that I mentioned, to engage all the limited partners, venture partner, ecosystem partner, and even portfolio founders to incentivize them to help each other, we are using another Web3 tool called dwork.xyz. This one is, for example, today when we are doing this excellent talk with these legendary founders here, if one or several of our team members come and join, they might be writing a mirror article for this, and right after they submit, we can review and approve this article, and they get 300 USDC right away. These are some of the best practice we have implemented, and of course, this will make the entire fund operation more efficient, more liquid, and the shareholders can be more dynamic. Currently, we cannot transfer the OVC security token to others without making change to our Cayman entity. That is still bound by SEC, but I think going forward, we might bypass that using some other approach. And I think the most interesting, the last point I want to make here is I'm a fan of radical meritocracy, which is, say for example, IN is one of our LPs. I am our founding partners of Outliers Fund 3. Maybe during the Q2 of this year, she herself brought in 5 deals and lead the deal evaluation, due diligence, portfolio management, all the way to exit strategy for DeFi. I did 5 deals as well this year in Q2 for DeFi. By end of this year, all the 5 that I do and she did, all listed on exchange or having market price. We can use these market price X1 to X5, and these parameters are dependent on how involved she is to this deal. Some of them are showing 1, meaning that she end-to-end lead the entire deal. We might find out that an LP or a portfolio founder of Outliers Fund 3 might actually have a better performance than a founding partner in Outliers Fund 3. And we hope to quantify those social credibility and expertise on certain investment track. So that in our Discord, you can see a leaderboard showing maybe Poseidon is only ranking number 88 out of 100 plus people on DeFi. I totally admit that I missed out the DeFi summer back in 2 years ago. And I shouldn't be the one having a lot of weight when we are investing the 11th DeFi project next year. So that's basically what we do as a venture DAO. Oh, Sascha, you are muted. You are muted.
That's the first one. Thank you very much for briefly introducing your projects. And now it's airdrop time. 3, 2, 1. Audience, please. The airdrop number 1 has just been released. Let's move on to the questions to our experts here. I would like to ask you about, from our own experience, we've been developing the business logic of Bitstore and encountered some crucial points that was also discussed in a recent video conference hosted by Elon Musk, Jack Dorsey, and Kathy Wood when talking about Twitter's future. And that is, how do you incentivize users to constantly generate value which someone else would love to pay for? We are talking about social finance as well. Poseidon, you just mentioned as well, there is payments for certain reports that are being provided. We do the same at Bitstore as well. We want to incentivize our users to produce content, and the better the content, the better they would be like monetizing on that knowledge and sharing. So how do you think could that be done? Maybe we can start with David again. How do you incentivize your users to constantly generate value which someone else would love to pay for? And the microphone.
Sure. Well, actually, it's a pretty tough question, to be honest with you, because basically there are a variety of ways of basically generating value as long as Web3 is concerned. So maybe I will start with my own like approach towards the whole thing, looking from the perspective of incentive, and then I'll try to give you maybe a more general answer. So, well, our core mission is to make Web3 accessible for everyone. And by everyone, I mean both people who want to become the users of the protocols and founders who would like to develop their own decentralized applications without need to spend a lot of resources they might not necessarily have at their early stages. So those often include both financial resources necessary to hire developer teams and capital, which is usually necessary to inject initial liquidity for the token native to the protocol if the protocol decides to have one. So sometimes these resources are pretty tough to come by. And now, to answer your question more precisely, so we incentivize Web3 users to come up with their own ideas and make them come true by lowering the deployment costs of the protocols. So this way, the value, which can be measured in quantity of new high quality and innovative protocols can be created. So also by democratizing the access to Web3 for people from the outside of the blockchain space, we can introduce a healthy competition to the space, which is currently dominated by a few protocols which happen to have a first mover advantage. But those protocols do not necessarily do enough to foster the adoption of blockchain-based applications in general. So to sum it up, I believe that value is where the adoption is. And Web3 cannot proceed or cannot develop further if it's not accessible to people who haven't done anything in the blockchain space before, because otherwise we keep on kind of talking to ourselves or between each other in this echo chamber. But what is important is actually bringing more people from the outside to our space. And as long as people realize what the intrinsic value, which lies in the participation in Web3 is, I think the better would be for people who decide to join the space. Then, as a result, those people can bring even more participants, making the whole network even more valuable. Because, as we know, to some extent, the value of the network is proportional to the number of the users who use the network itself. So I believe, first of all, we should start off with education, with making the space more accessible for people who haven't dealt with it or joined it before. And this is how value is created. And the more capital is deployed into the ecosystem, the better it is for the users to join, because they will get further incentive being the result of using things that they haven't used before. And I believe that Web3 solutions, especially DeFi here, is kind of a healthy competition to the legacy financial markets. So I think this is a win-win situation, but I would say that bringing the adoption to the space should be our utmost priority, regardless of we all do, because like some of our protocols can actually overlap at some point, but like there's nothing wrong with it. I mean, as far as we all bring adoption to the space, I can see a potentially bright future there. So that's it from me.
All right, thank you, David. Miguel, what's your take on that? How to incentivize users to actually generate valuable content?
Well, over that, I mean, that's a really great question because anyone can create anything, but how do you get people to use it? How do you get people to use something? For instance, if you look about 13 years ago, 14 years ago, everyone had cell phones back then. Most people had cell phones back then, but most of them were not smartphones. No, there were regular cell phones. You could just make phone calls and receive phone calls, basic stuff like sending SMS messages. But eventually something new came up. Some new technology came up. You started seeing HTC's had this cell phone, which I really liked. Was one of the first smartphones I ever saw was the HTC Viva. So you could actually do more stuff. It had like an interface, it had Windows on it, but then along came the iPhone. Everyone laughed at it because it was so groundbreaking. It was so weird. There was no keyboard, nothing. It was just a touchscreen. And everyone said it would fail. No, most people didn't see the potential in it. And a couple of years after, everyone was following the same model. You started seeing touchscreen phones everywhere, and this is what started happening, and it became a trend. Looking back, you can realize that one of the main reasons was the user experience. I believe every technology becomes successful once you forget when you're using it. You're not thinking about it anymore. You just use it. Everyone now has a smartphone, and I believe everyone now has a smartphone that has a touchscreen, regardless of the brand. So it's about bringing people into your platform. It's about making it easy for people to use it, not have like extremely technical people and being your focus, but anyone that uses anything, people that just watch TV, buy stuff on their phone. This is going to be like the next big wave of users coming into crypto. The regular people who are not technical, who are artists or business administrators, someone that has a small business that they're running, and we can bring these people into crypto with Web3, by having an improved user experience and of course improved security. When people feel secure about their funds, they're not scared that some hacker is going to take away everything that they work for, then it will be easier for them to adopt this new technology. Web3 has a lot of potential. And one of the key points here will be decentralization. If Web3 platforms, they cannot sacrifice decentralization for speed or for additional features, but focus on security, focus on user experience, and focus on being decentralized. Eventually, we'll be getting more and more people. Of course, the technology has to evolve as well. Currently, with layer 1 solutions, it's going to be extremely difficult to get a lot of people coming in, but with stuff like layer 2 in the future, well, layer 2 is already started, but it will take time to be fully adopted. Once you get stuff like this, you can begin to get like millions of people and eventually, hopefully, a billion users coming into crypto. Right now, 99% of the people, regular people, don't even know what blockchain is. They don't know. Some of them have seen something in the media or news or whatever, but they don't know how it works. So what we've been doing, we've been working on educating our community, not just tech people, but also what we call crypto newbies, which is, recently my mom asked me what Bitcoin was. So that's, my mom's 77 years old, so that's a huge plus. And she knows a little bit about it, but it's great to have someone that age wanting to learn and get into crypto. So yeah, I believe user experience and security and decentralization will be key to bring more people in.
Yeah, excellent. You made a really good point there, the user experience. And second is like the next generation of crypto enthusiasts, right? This is also like where we Bitstore saw our potential. We wanted to give an easy access to this new world and not making it super complicated, having user interfaces that are difficult to grab, and also like using these features of social finance and having those people that already have certain knowledge, educating and sharing and helping those that are newbies. And I believe that our Bitstore in that regard has made crypto trading as easy as shopping. We have a very easy way of purchasing those digital assets. And at the same time, we provide this platform of having more seasoned investors and traders sharing their portfolios, giving advice, and then actually also monetizing once again their knowledge. Our our project token, the store, is then the currency which is being traded between those that have the knowledge and want, you know, to monetize on it, and those that are new to that and trust in those people that have proven to be right in their predictions or in their trades. But that's us. We are a bit wider in the concept. But now back to outliers, Poseidon. You are a DAO already. So how do you see is it for you, or where do you see its potential to incentivize people to create valuable content?
Yeah. First of all, I think what's beautiful about DAO is that every DAO member can essentially convert their time, their financial capital, their connections, their knowledge, their skills, their experience, their perception into, I currently see two types of assets in Web3. One is more like a social tokens representing your social credibility. Just like traditionally when we see people spending a lot of time on some debating on some Twitter threads or Reddit, I think those people aren't really getting paid by a financial incentive, but they want their voice to be heard by some of the important key investor founders they consider looking up to. Secondly, your financial incentive. I think traditionally, a lot of the VC works are contributable to founders and investors, but it's not easy to be rewarded purely because it's not easy to be divided and quantified. But in DAO, almost every single action can be quantified as a project, as a task on our Web3 pipeline, just like the one that I just shared. The work that XYZ is like a Web3 native Trello that can do everything that Trello can do, except it provides tokenized payment. Once everyone connect your MetaMask ERC20 wallet address, it is your decentralized identity. You don't need to necessarily let people know who your real identity is, but I think going forward, we'll see more and more top contributors to different DAOs using this indicator as their resume. It's going to become their new LinkedIn. In the future, if there's two talents, one is someone I know is pretty senior, have been in venture capital industry for 30 years. Maybe the first 10 years was spent in Sequoia, second year in DFJ, third 10 years spent in A6 and Z, versus another young guy who is at his early 20s, but he can justify himself through the stars he received on GitHub, through the points he received on several investment DAOs. I would much lean towards believing that young guy having a higher perception than this guy having over 30 years old and in the industry. Especially in Web3, almost everything is evolving so fast that I believe the best strategy in DeFi in 2020 might not even work in 2021. And those best investment strategy that worked in GameFi, Metaverse, NFT in 2021 might not even work in 2022. And so a lot of works that we're doing within our DAO or in other people's DAO is essentially using collective intelligence, using a decentralized community to tackle something that our perception level cannot reach.
Yeah, thank you, Poseidon. I can also pick two things that you have mentioned already on Web 2, like the social media exposure that everyone is so after. is also going to continue in Web3. Everyone wants to share their success,
Yes.
their failures, their emotions. And I believe that this is where social finance app like ours, like the Bitstore, is big, because yes, they can make money by setting up their own groups. They can make money like getting a bit share by people following their trades, but they are also having the chance to get a name. And as you said, use their expertise or their image in other groups, in other DAOs or in NFT communities. So you create an image of yourself by sharing what you know. And yeah, so people look up to you at some point because you've been successful with certain trades, with certain predictions, and just helping people to understand that space. Thank you very much, guys, for that one. And it's airdrop time again. 3, 2, 1, and here you go. Next question. We had quite a like crash, I would say, or like, let's put it this way. The crypto market has seen in the past some correlation between tech stocks and how do you think, why is that? Why is the mainstream perspective now that like the tech stocks and the crypto market, the crypto digital assets are so connected to each other? What's your view on that? How did that happen? Maybe we can start with you, Miguel.
Well, you know, crypto markets have always been very volatile. Ever since I joined crypto back in 2013, you started seeing all the different swings. Early in 2013, you saw crypto going from 50 to maybe, I think it went up to $200, $300, and that's a huge swing up. And of course, it was getting people's attention, but eventually crashed back down 87% from $1,000 to a little bit over 200 or something back in early 2014. And it happens due to different reasons. It's happened before because of news. Actually, 2013 was a combination of the Mount Gox debacle and also China ban from late 2013. And it happened again in 2017, where, you know, when everything started crashing in, that was actually 2018, in early January, February. It's always a different reason, but you can see there's always a pattern. And you know, the implosion that we saw in the past couple of months has been extremely big. I think it has been the single biggest drop in value, in market value in the history of crypto. I wouldn't say so much in percentage because it's a similar percentage, but the market is so much bigger now. There's so much more volume. There's so much more money floating around that you can. I mean, the numbers were incredibly big. It was pretty awful to watch, actually. And you know, I believe you know, blockchain in general, and especially Web3, it holds an amazing potential. The possibilities are enormous for the future, and it's unpredictable. Markets are unpredictable, and like we mentioned before, it's growing extremely quickly. Everything's growing very fast. Technology is evolving, and I believe personally that eventually markets will continue to be markets. They will go up, they will go down, but we need to focus and continue to build. We need to focus on continue to build the technologies, continue to build the ecosystems, and find ways to make everything continue to be decentralized, but make it quick, not sacrifice speed for, I'm sorry, not sacrifice decentralization for speed, because that's an issue when you start setting up validator nodes to have faster transactions, because eventually you start getting issues like your blockchain might shut down because of some software bug, or, you know, lose track of time, and then your blockchain clock runs behind. And I mean, this is something that can happen to a single node on something like Bitcoin, something like Ethereum, something like Quantum. Because you have decentralized blockchains and each node is equal. So if my node that's running, for instance, in Miami, it's the server clock runs behind, it's only going to affect this node, but not the entire blockchain. So this is part of the principle of blockchain to, it increases security, it increases it makes things safer, and it closes a lot of doors that might be open for hackers who want to attack a network. So those, I know I mentioned it before, the decentralization stuff, but it's something that I believe that will be key for the future. And markets, there will continue to be markets. They're unpredictable. I don't trade myself because of that reason. It freaks me out. It just makes me scared to even think about it. But yeah, I mean, in general, they will continue to behave that way. And I would suggest to people to just play it safe, never risk more than you can lose.
Thank you, Miguel. David, the question to you: do you think it was a coincidence that the tech titles went down and then the crypto market went right after it, just a couple of weeks ago?
Well, bluntly speaking, I think it wasn't. So, like in general, in my opinion, the prices of cryptocurrencies have always been correlated with the prices of the stock markets. And anybody who believes it is not the case is simply delusional. So the only difference I can see in our previous bull market as opposed to the one from 2017 is that more institutional money got involved in the space, plus the inflation rate, of course, but let's say that this is not the topic of our discussion, it's not the subject of the question. So basically, in times of uncertain geopolitical situation and COVID, many investors try to reduce the risk exposure by moving their capital over to less risky and less volatile asset classes. So from cryptocurrencies to stocks and eventually cash, which is the king in the bear market, as it mitigates the temporary volatility, right? So basically, if you think about it, the same applies to the cryptocurrency market itself. So during the tough times, the capital moves back from the low caps to mid caps and eventually to BTC, which still kind of remains the most stable digital asset simply because of the economical energy behind it, if you will. So that causes the prices of digital assets following the exact same pattern, but in a lockstep, which means that during bull markets, altcoins appreciate in value faster compared to BTC, but during bear markets, they crash harder and faster as well. So basically, the stock market affects the BTC and BTC affects everything else, starting from Ethereum and going all the way down. So, like in my opinion, like in the cryptocurrency markets, the volatility of the assets is a price that investors pay for gains that are simply impossible to be made elsewhere. So those who understand it end up winning, and others end up buying tops and selling bottoms because it's a game of impatient paying money to the patient. I'm not sure whose quote it was, probably Warren Buffett or whatever, but like it seems to perfectly like fit this narrative, which I truly believe in. So basically, to sum it up, I think the market has been like overheated for a long time. And the correction we are experiencing right now is not only healthy, but necessary for further development of the ecosystem. So it's really tough to say where the bottom is right now. But I am sure that this bear market is not going to be any different from the previous ones. So it's going to be followed by another bull cycle. And that's it, because as we know, the markets behave in cycles. So like in my opinion, and for those of us who have been around for longer, such as Miguel and Poseidon, well, I think this is nothing new. I mean, this is something that has been happening like numerous times. I don't know how many times, like probably 11 or so. So this is no news, and it can be shocking for those who have joined the industry or the whole ecosystem recently, especially for those who were unfortunate enough to buy the top right before the things crashed. But this is just a matter of being patient, and I do not see any major differences compared with other bear cycles, and I do not really consider it to be a major issue. I mean, this is something that all of us have to wait out, and like on this point, I would also agree with Miguel that, well, market does what market does, but I don't see the market heading in another direction compared with what happened before. So a little bit of a shakeout for probably a month or two, maybe a bit longer, and then the whole story repeats, because, like, let me put it this way, the history doesn't repeat, but it rhymes quite often. And I believe this is what's going to happen, like, pretty soon after this current correction or bear market, however you call it, concludes.
Thank you, David. Yeah, indeed, like this crash probably has seen a few people getting out of the market and not trading anymore because they got burned, they lost their assets. But Miguel said as well, you know, the next generation is waiting. May it be a grandma, may it be a student that is getting into this. I think there's more people coming back, and maybe they might be just using this moment also to invest. And the next cycle is then just about to start. Poseidon, from your perspective, short and brief, you are a venture capital DAO. How do you see? Is there a correlation still between tech Web2 stocks or like a crypto market, or how have you been affected during those last couple of weeks? Can we have the microphone?
Yeah, so I think it's a very complicated question. I'm not sure I'm the best expert to answer this question, but being someone who got into the space during probably the second bearish return, I can summarize a little bit insights that we have found in the past 13 years, purely on technical analysis, not about fundamental, not about sentiments. So probably the first bullish run was due to people realizing that Bitcoin and other altcoins have the ability to bypass government tracing on shipping, transaction, drugs, weapons, and others. And it's very overhyped. This blue lines indicates the most bottom support line under our own calculation. When people ask me this question, whether there is a underlying value support for Bitcoin, I kept changing my answer in the past 6 years, every single year. But I were to answer, I think most generally it is user consensus. I realized that there are 300 million people that have once have a crypto or have created a crypto wallet. That is roughly probably 3% of the people on the planet these days. This is the number we traced by end of last year. As the user consensus grow, we need to understand that there are several layers that support different prices. Again, I'm not a technical or secondary market trader at all, but I found out maybe the upper layer is builder startups. And then secondly, there are incubators, accelerator, venture capital investors like us. And then crypto exchanges that will be affected by many of the fluctuations. And then market makers, liquidity providers, those people who are doing treasury management. And then people, the second bottom layer might be people doing DeFi strategies such as crypto staking, yacht farming, liquidity mining. When these major coins drop to a certain level, the APY, no matter it's 10% to 20%, cannot be market neutral anymore. It will fall down to the incident, just like Terra Luna and UST. But I always consider, if we are just talking about Bitcoin and if it's still under proof of work consensus algorithm, maybe the most bottom line is supported by miners. Those people have a trustless, decentralized consensus. I remember before the third Bitcoin happening 2020 in May, our team have 2 female PhD. They were semi-joking by using macroeconomics and pure mathematics, learning the market patterns in the past 9 years. And they both give out a number that is very close, which is in between 4,000 to 4.5 thousand. They said, if by any chance Bitcoin dropped to this before the third Bitcoin happening, maybe above this number, we'll keep purchasing Bitcoin at 9,500, 9,000, 85, 80, 70, 60, 50. But when it breaks this bottom price support, we might want to sacrifice all of our long position and then turn into shorting, because even Bitcoin have a chance of falling into this death spiral effect. Mainly for those miners who, when they no longer feel worth it, they have a very accurate estimation of the cost compared to all the traders on secondary market exchange. For example, if you are living in Sichuan, Chongqing, some government, before they clean out all the miners and mining farm last year, September, they are incentivizing these mining firm companies to move to Sichuan, Chongqing by giving them free electricity, free internet access. But you still need to purchase those machines, those mining rigs, those GPU or ASICs. You know, I was very surprised that they can calculate a number to me, such as, for example, 243 days exactly, when Bitcoin's price is not going up or going down, say maintaining the same price last year. They know this is the days that they can break even. But there is one time that I personally experienced, we getting very close to the most bottom line of support line for Bitcoin, which is during, I think, March 11th to 12th. I remember, I don't know if I remember correctly. That was the first time we experienced the stock market having 4 times. I don't know what do you call that in English? Sorry. There is 4 consecutive days that we hit the bottom of the stock market, and Bitcoin's price within 24 hours dropped all the way from 9,600 to somewhere below 5,000. That was the time that we were very, very close. So after 6 years, 5 years, if people ask me, to be honest, when I was back in 2016 and 17, I got into crypto at this moment. When people ask me if there is a chance, would there really be a chance that Ethereum goes to 0 or Bitcoin goes to 0? I always say no, not possible. I have seen Ethereum going from 6 all the way to 1,400. But after experiencing this by myself, I found that everything is possible as long as the user consensus is not there anymore. If someday all the 300 million people have a call with each other, all get on Zoom and find out that Bitcoin is not positive to climate change for the bigger society, and we decided to all move from Bitcoin, to another cryptocurrency that is more eco-friendly, and we might be the ones who are using user consensus shift to shut down Bitcoin. So everything is possible, to my humble opinion. Yeah.
Thank you, Poseidon. All right, we come to our last airdrop. 3, 2, 1, and done. We also come to the end of our session here, to of our panel discussion. Thank you very much, David and Poseidon and Miguel, also for your insights and your opinions and views on those different topics that we touched upon. Wish you all in your projects much of luck and success, of course. And thank you very much for your time, and also to the audience. Thank you for listening and watching us, and wish everyone an amazing day. Thank you, guys.
Thank you so much. Thank you so much for the audience that watch this great panel with this great team, and thank you so much, Poseidon. Thank you so much, David. You guys were amazing, and hope to do something like this again in the future.
Yeah, thank you, Miguel. Thank you, Sascha.
Same goes from me. Thank you so much, Poseidon. Thank you, Sascha. Thank you, Miguel. That was a pleasure to share the scene with you today. I think your perspective were very interesting. I also do believe that we basically agreed on almost every issue that was basically touched upon today. So that's another kind of a cool thing, because it's a proof of social consensus that Poseidon mentioned. And guys, thank you once again for your time, and hopefully till the next time. Thank you so much. Bye-bye.
Bye-bye.
Till next time. Thank you, guys.
See you next time. Bye-bye.